Hello traders, Gary Wagner here, 12:36 in Honolulu, 5:36 in New York on Wednesday, January 26th, 2022, and this is the Daily Report for Gold and Silver. It was an extremely volatile day with the conclusion of the FOMC meeting today, the statement as well as Chairman Powell's press conference. As we will show you on a 10-minute chart, there was a vast majority of selling pressure that came in prior to the release of the statement. Once the statement was released, gold remained steady at approximately 1,830. However, when Chairman Powell started his press conference, gold started to melt down again, trading to a low of $1,814.10 and is currently fixed at $18.80. That is basis the February contract. Silver declined by about 34 cents today, with the most active March contract currently at $23.55.5. The trade alert we sent out did include silver. We are not stopped out. We'll discuss the details when we fill up our first silver chart. Not all of the precious metals traded lower today, with a strong upside move in palladium and a moderate gain in platinum. Platinum gained about $7, currently just over $1,000 at $1,032. Palladium, however, gained almost 6%, a net gain of $131. To give you an idea of the volatility that occurred in trading today in London and Hong Kong, you can see that that is when gold hit its highs of the day, right around $1,850. It did move lower throughout the day in Globex trading up until the open of New York, and that is this candle. In other words, it opened at $1,838. Now, when the statement was released, which would have been at 9 o'clock, and I'm just converting this from Hawaiian time, you can see that gold moved up a little bit from the lows and remained at approximately 1,838. It was when Powell began to speak. It did sell off slightly, but only to about 1830 from about 1838. As Powell began his press conference, you can see the quick demise as it traded to the lows of the day, which came in at approximately $1,814. The statement was on par with economists' expectations. It is obvious from the sell-off that those investing in gold and silver did not factor in a more hawkish Fed to current pricing, because we had an immense drop from 1850 down to 1814 over the last 12 hours of trading. There was one distinction, and that is in the statement, a document was included that details their plans about reducing their balance sheet. We were all aware of the fact that they would taper by March. That was the plan they announced at the last FOMC meeting. But this is the first time concrete information about asset balances being reduced. And that is, to me, the only key difference. Nonetheless, we did send out a trade alert buying the April contract at $1,834 with a stop at $1,819, and we were stopped out, resulting in a loss of $15 per ounce. So what is my current outlook for gold? I feel that it's extremely unfortunate that we did take a hit in the market. We kept our stop very tight in case the Fed came out with an extremely more aggressive or hawkish tone. And I really don't believe that they had, which is why I am somewhat perplexed that as Powell spoke, the market actually sold off from 1830 or so, our entry price, because my sense or feeling is that we could see a repeat of what we saw in December as well as November in regards to how gold sold off at the exact day or conclusion of the FOMC meeting, and then the following day was followed by a price advance. In the case of the November meeting, an extremely solid rally. In the case of the December meeting, a rally that contains some ebbs and flows or peaks or valleys. I think that it's highly likely that we will see gold move higher now that the FOMC meeting has concluded. We will look to reposition ourselves, but the other thing that is clear is that we have been trading within a defined compression triangle. We did hit the upper end of the range. In other words, that first level of resistance that I identified. We also broke through the first level of support. However, I see major support between 1800 and 1807, the 50-day moving average, as well as 1805, the 200-day moving average. I still believe that gold could easily make a play for these tops because the one sentence that Chairman Powell said during the press conference is that he expects inflationary pressures to move beyond what we saw in December. CPI in December came in at 7%, so we could get a reading of something higher than that, 7.4, 7.5, which puts us in a new territory. He didn't spend too much time about the length that the inflationary pressure will persist, but my sense is that there's no way we will see any kind of large contraction in inflation this year, and most likely till the end of 2023 before inflationary rates begin to normalize. Traders, in the trade alert we sent out this morning, we also recommended initiating a long position in silver. We got in the March contract at 23.71. However, I need to point out a typo that was quite obvious. It goes place your stop at 24.05 with the current market price at 23.71. You never place a buy stop above current pricing. The typo reflected the actual intent, which is to place your stop at 23.05. It is a little bit against us. It is currently trading at 23.59, and our stop is at 23.05. And traders, by far, the precious metals that has had the most dynamic move has been palladium. If you take a look at it over the last week and a half, it has gone almost parabolic. That is because the vast majority of palladium is mined in Russia and the increased tensions between Russia and the Ukraine. That being said, we've looked at palladium before to trade in our portfolio, but the liquidity is so thin based on a small contract size that it's very difficult to trade it even if you place a relatively loose stop and the ask and bid spread are so far away. We might explore an option strategy, but the volatility will be priced into that. But I am looking for a technique that can capture the upside potential of palladium without having enormous risk, and that, of course, will be a challenge. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.